Hello friends, this is in continuation to our previous video which is on causes of NPA. You see NPA is non-performing asset. Saw the classification of this is in our previous video. Now if you're logging into this video for the first time, so please do check our other videos also on the same topic of NPA. Now you see in last we have seen that NPA is classified into special mention account 0, 1 and 2, and then not only this, in doubtful category, we have categorized our loan accounts into substandard, doubtful, and loss category. And we have seen something on like how like the 10 time based classification is done for these cases. Now let's see what are the various causes of NPA, which is creating havoc in banking sector. Now you see, if you look into this banking sector as a whole, you'll find banking NPA is nothing but the black hole. You see, black hole is something very tough to manage. You cannot manage it, so it is choking up everything. If something is going into black hole, it is not going to come back. So if any NPA is happening, so it is like your net NPA can be considered equivalent to black hole, where recovery is very tough. You will not be able to do anything for these, and the only way out is like, you see, you need to be very cautious. Prevent. The prevention is better than cure. So it is better you plan it such credit policies where scope for NPA is not there. But sometimes you see certain things are not planned for, so they are unintentional, market driven. You don't have much of choice. But being a banker, being a financer to an economy, you need to keep on experimenting. Now you see these are the various impacts of NPA on Indian economy. We'll try to see the reasons too. But here you just go through it. So it is actually NPA which brings in scarcity of funds. Banks will not be able to lend it comfortably due to this uncomfort zone of NPA. Now, you see, banks will be willing to lend only if they are sure for recovery. Yani they would be expecting more of collaterals. Imagine the state of a farmer or a person who belongs to below poverty line would like to borrow. Now, they for sure. You see, bankers will be rigid when they come to this category. Next is like this two shareholders of the bank loses lots of money. What it means ki like if NPA is going up for a particular bank, it will affect not only the balance sheet of the bank, but also you see it will affect the shareholders' commitment towards this bank, and it will have a negative effect on the valuation of the share. The interest rate will shoot up. Why? Because you have to recover it from the remaining assets, and you have to pay deposit holder on due dates. Private banks, money lenders, you see, they came into existence. The reason is like they are very exploitative in nature. But when we are going with traditional commercial banks, you see, they people are very user friendly. They are customer driven. But when they are not getting their recoveries, you see, chances of their survival is very less. And you see, again, we are going back to the same old regime where people have to depend on money lenders for their loan requirement. Is tough. Next is like people usually borrowers who are taking money, they may fall into a debt trap. And it is a very vicious circle where you see, if you fall into this, you will not be able to come out of this crisis easy. NPA is actually like you see is a very serious problem which may bring in economic slowdown. You remember what happened in subprime crisis, what happened in Dubai real estate crisis. You see, every time banks were involved somehow directly or indirectly, and an effect on banking means you see their lending practices will change because of this. Okay, so recession, inflation, they all are like an output of what like sort of monetary environment you do have in your country. So you see, somewhere NPA do have their correlation with the economic progress of a country. So if we have a lower level, so it is good. If it is on a higher side, you see banks are always vulnerable. They may fail anytime, and then you see government of your country is always in a worry that how to ensure that public trust is remained in your banking system. So it will either destroy or like you see your conventional banking culture, NPA. So this is the impact of NPA on economy. Let's go into the problem of NPA. You can see 10 lakh crores plus is your value that is there in NPA. This is no doubt a old picture, but it is not only a problem in India but across the country. You see, most of the countries they are facing severe problem. NPA leads to default, credit default. Credit default means the money that is given to a borrower for a purpose, like let's say that money is given on time, but when it is recovery time, they're not repaying it back. So it is a severe problem, because banks, if they are unable to recover their loans, how are they supposed to pay it to their deposit holders on maturity date? And deposit holder means they are actually the contributors for this growth. So if the depositors trust is breached, so they are not able to, like you see, your economic system, your financial system will be totally collapsed. So we need to make sure that banks should be able to have some provisions through which they are able to deal with this particular NPA problem. Let's go into it, how and why it happens. Like NPA is coming up, why? Because there may be some, so these are some of the points which I mentioned. Maybe due to bad lending practices, when banks neglect the basic fundamental principles which need to be kept in mind, like repaying the capacity of an individual. You see, let me give you one example here. What if you see like young students who are just there in college going, and then they do have their pocket money, are given credit cards. So you see, they using a credit card at such an early age is not a problem is like when they get an opportunity, they'll use it. But how are they supposed to pay it back? No clarity on this. So it's a bad lending practice. Or giving a loan to, let's say, housewife segment under the name called as Sri Shakti. You see, you'll find, no doubt, when loan is given is good for customer, but when it is recovery time, sometimes when you're not able to get it back is where is your problem. So loans are usually accompanied with collaterals, but if any bank is giving it without collateral is a serious problem. Okay, so one side we say expecting collateral is wrong from the vulnerable community, but on other side we are saying in order to preserve, in order to have future security, you want this. So you see, both the stakeholders, they have their contradicting interests, and we need to have a balance in between. Next is like competition. Maybe due to excessive competition, banks are compelled to go for lower collateral expectations. Like you see, customer is king, so customer will prefer to go to a bank where there is no expectation of collateral. Okay, due to competition, this is all competition which is compelling banks to liberalize or relax their like stringent norms when it comes to loaning. Incremental component means, again, you see, it is banks internal credit policy which is like responsible for this blunder. Okay, so how banks are framing their policies, it should be in line to the standard principles, not in line to like aggressive approach. You see, this is public money, not personal money. So if you use this public money, you cannot be reckless. You cannot be like careless. It is to be taken, like utmost care has to be taken dealing with these funds, public funds. So accordingly, bank policies should be made. Like, and then there are environmental factors and certain crises which you cannot avoid. COVID was an example of it. So in this video, we'll try to see the causes of NPA. So let's start with speculation. Let's say someone is given a money for a education loan, and the person who is actually a student, he got an opportunity to know about stock market, and he came to know from somewhere that money can be doubled in a very short period of time if you invest in an IPO. You see, if this money which is given for education purpose is given for like is transferred into a different investment project without the knowledge of bank, what it means, diversion of funds. Do you think it is going to be repaid? No. Speculation is something like when you expect something very high in a short period of time, you buy it, and then later on you sell it when it is like you buy cheap and you sell costly. So you see, market never works according to our expectation. If things work as per our expectation, we are billionaire. But if things work against us, which is usually happening, so you see, this is what is called as a situation where your account will go into NPA. Next is default. Now sometimes these defaults are willful defaults. Take the example of Vijay Mallya, Nirav Modi. The people were very much aware about their default. They were aware that they will be caught. Hence, what they did is like before they are actually caught by various financial intermediaries, they left the country and they moved out. So this is intentional default. When people are not ready to give it back, they would like to consume it, and then when it is repayment time, they simply say we don't have money. So this is what is intentional default. Next is fraudulent practice. You see, who is doing it? Maybe managers, the internal part of bank. Like let's say the people who are responsible for giving loans. If they start charging commission, if they start giving loans without collateral, but for this favor they are expecting some like commission or some like a fixed percentage of the loan. You see, it is happening in rural area where people don't have much of awareness, much of like they don't know how to approach authorities. So there fraudulent practices from both banker side as well as from customer side. They are taking a loan against certain fraudulent documents which cannot be verified, and you see bankers are very careless without doing this scrutiny, without doing this cross validation. They give this money to people. You see, this is very rarely happen, but once in a while you do see such cases too. So next is diversion of fund, already discussed. Internal reasons, maybe like you see inefficiency of your top management. The technology that you're using may be wrong. Labor crisis, maybe there, like labor union go for a strike, something like this. Marketing failure, you develop a product, you take it to market, but market is not ready to buy your product due to the product features that you have. Or let's say the features that the customer is demanding is like the market is very dynamic, every day a new change is happening, and due to which your product is now no more fit to accomplish the like demands of your clients. So again, it may lead to NPA, and it may lead to poor performance of these companies where money is invested by bank as a lender. Okay, there may be external reasons like recession, it may be a global depression, it may be some price rise, interest rate variations. So these all factors, or maybe a change in some legal law or in your environmental context, which may have a negative effect, or maybe a natural calamity. So in all these cases, NPA is for sure there. Again, you see, you can go through this. This is like these are some of the indicators which tells you that there is a problem upcoming. So annual review not completed on time, poor credit discipline and imperfect documentation, inadequate risk management measures in place. You see, let's say you construct a building, high rise building, and you don't have fire extinguishers, or let's say you don't have lift in it, or let's say this is not earthquake resistance building. You see, these are all factors which may create a bigger problem later. So funding of non-viable projects, yani projects which are looking infeasible on day one itself. Why are you supposed to take an exposure? But if you take an exposure just to increase the balance sheet, the size of your balance sheet, you see, this is nothing but this is suicidal, and this is public money which is actually stuck into these projects. Very rare, but it do happen. Improper assessment of clients' banking requirement. Then you do have certain external forces which play a key role. Okay, then you have internal monitoring system which is not proper. Any, let's say internal audit is coming in, this internal audit is not able to catch the fault. Then you see what is required. It's like you see you need a smarter monitoring agency which is not internal in nature, maybe external. So you see you have to keep a balance. Then you have to look for a balanced approach. Should not be very aggressive towards profitability. Okay, so at the cost of like your own position going into like a very questionable in terms of sustainability. So high decentralization of uh, lending decisions. You see, decentralization means you have to give it to everyone, huh? Like centralization means every decision taken at center. Decentralization means every decision is taken at every level. So let's say branch is taking a decision on loan, regional office is taking it, HO is taking it. So if everyone is allowed, is maybe sometimes a point where you see some sort of fraud is possible at branch level. So it is important that you see certain core tolerance points should be set. Certain structural policy changes should be there, like where people know it when it is time. You can do it at your level, and when it is time when you where you have to bring in your senior authorities into consultation. Okay, mismatch of asset and liability is a major issue. Like portfolio is growing up very fast, and you are very aggressive giving loans to every party. Means most of the parties, and then this growth of loaning is very fast. Okay, you must have seen it happened with China. So giving loan to every country means their loan books go up very fast. Their Chinese banks have gone up into the ranking very fast. You see, uh, the rate at which you are growing, if it is like debatable, not at par with other global counterparts, means sometimes the speed at which you are going up, similarly, the same speed you will come back. And going up is good. When it is coming back, is very disastrous. Okay, need to have a balance. Go slow. Lending should not be reckless. Public money is there. Then you see, lending culture is also changing, like from centralized to decentralized. Many a time you will find that when we change the culture of lending in a particular institution, sometimes this transition also leads to NPA. Okay, so then macroeconomic policies, they do affect loan portfolios. You do have internal policies and procedures which are weak, loose underwriting standards. Sometimes in this case, like you see, you will find fault on the part of clients and you are not able to observe it. So that is what leads to NPA. Growth in interconnected borrowing. You see, inter-party, one party giving a loan to another and then again taking a deposit. You see, interbank lending and borrowing is not recommended by RBI. Similarly, inter-party transactions, if you have these, this is actually an indication. Okay, this is a sort of warning notification. So if you find something like this, it may lead to NPA later. Okay, so be cautious. When lending opportunities are like coming down, what you do is like you go into the subprime category. It happened in 2008 in USA. Like when the market is saturated, in order to have same sort of growth rates, you start exploring with certain communities which are not actually credible enough to give loan. Okay, so need to keep your standards. When financial sector is expanding beyond the capacity of central bank, this is where you see they will not be able to effectively monitor and regulate. Okay, so and things will happen which they don't know how to manage. You see, subprime crisis is actually also when you look into this crisis in depth, you'll find derivative was a product which was brought into market, credit derivatives. And you see, regulators don't have their competency to deal with such products many a times. Okay, now you see the emerging issues like of on cryptocurrency. You see, in cryptocurrency, you do have an element of like you don't know who is doing it, how it is being done. There is no one who can regulate this. You don't have an access to these transactions. You can see how it is moving, but you don't know the credentials of the person who are doing it. So you see how regulator is going to effectively monitor it. Hence, there is a problem. So you should do what is actually manageable, not something which is not manageable. Poor performance of some of the business sectors, rising interest rate on overdraft and discountings. You see, eroding margins in various business. You see, businessman is interested in investing is because of their margins. But if margins started falling down, means their inclination for more investment, their inclination to get connected into the same business line is going down, and then hence leading to NPA. Diversion of fund by promoters. So promoters taking money from one sector to another sector. This is what happened in the famous case of Satya. So go through it, you'll understand what is this diversion of funds at a higher management level. Okay, so I hope these factors are more than sufficient to tell you insight of like how